Welcome to TBG Talks, expert insights for your business success, the podcast where we dive deep into the world of accounting and finance, consulting, business, and the employee experience with experts at the Bonadio Group. In each episode, we'll sit down with our firm's thought leaders to discuss the latest trends, challenges, and strategies shaping the industries we serve and the modern-day accounting workforce. Today's episode of TBG Talks is hosted by myself, Valerie Busella, content marketing specialist here at the Bonadio Group, and I am joined by our Director of Tax Technical, Jess LeDonne, for a second time. In her current role, Jess serves as a key resource on tax legislation, technical guidance, and policy developments that impact our clients' businesses. Jess oversees our specialized tax technical teams, ensuring they deliver innovative, consistent, and practical solutions. She closely monitors the evolving legislative and regulatory landscape to provide clients with clear, actionable insights that drive informed decision-making. In this episode, we're reconnecting with Jess for a 6-month check-in on the post-election economic and policy landscape. A lot has changed since Jess first joined us. Between new legislative proposals, shifting market conditions, and continued uncertainty, business leaders have a lot to stay on top of. Jess returns to help us make sense of it all, sharing insights on what's happening now, what may be coming next, and how to remain adaptable when the only constant is change. So without further ado, let's get started. Hi, Jess. Welcome back to the podcast.
Hey, Val. Yeah, thanks for having me. I'm so happy to be here again.
You are actually our first repeat guest on TBG Talks, so very exciting.
Yes, friend of the pod. That's wonderful.
So for our listeners who may have missed your first episode, first of all, I encourage you to check it out. We'll have it linked in our episode's description on our website and Spotify. But Jess, can you give a quick intro or share a little bit about your background for those who may have missed the first episode?
Nobody missed the first episode, Val. Everybody. No, I'm happy to. My name is Jess LeDonne, and I am the director of our tax technical here at Bonadio. I believe my title last time I was on was different. I was director of policy and legislative affairs. So an update there. I really, focus my work on the tax technical side, interpreting laws, regulations, anything that's going to impact our work with clients. And obviously that's significantly tied up with the policy and legislative affairs that I have been working in for most of my career. So I still, keep my finger on the pulse of anything that's happening at the federal or state level for all of our clients to help them make sense of things that are changing. So yep, that's my background. I am an attorney, so nothing here is legal advice. But yeah, I really have enjoyed my time at Bonadio. I think I'm coming up on approaching 3 years, so it's been great.
Very exciting. Well, thank you for sharing your background. So last time we had you on the podcast back in December, we had a discussion on kind of the post-election economic and policy landscape. So for today's episode, I'm hoping we can do kind of a 6-month check-in on that. Obviously, a lot has changed. And since we chatted back in December, we've seen a lot of movement in the tax policy space, especially with the unveiling of the GOP's new tax proposal. So can you speak on that a little bit?
Yeah, absolutely. I mean, it's interesting timing because when we spoke in December, we obviously knew the results of the presidential election. We had a pretty good sense of the results in Congress on both the Senate and the House side. But now, as we sit here this morning, it's June 12th. We have a lot more information on the new administration. We know the makeup of Congress. We have a lot has changed. That being said, there's still a lot that's up in the air. As we sit here right now, you mentioned the new tax bill. That is a big piece of legislation. We'll obviously spend a lot of time talking about that today. But we've also seen under this new administration kind of a strategy around the use of executive orders. So, even on day one and through now, we've seen I believe the Trump administration has signed over 150 executive orders during this current term. And, a lot of those are tied up in litigation. There's questions about what they mean for clients. And so there's a lot that's still up in the air. So we do have clarity in a lot of ways, but we're still waiting on a lot of details. As far as the tax proposal that you mentioned, this is the One Big Beautiful Bill Act, which I will not be calling it by its long formal name
I don't
throughout
blame you.
today. I'll just call it the bill. Um, so the bill has passed the House at this point, and is moving into Senate review. So, we can talk about the details of that. It is reminding us about the situation that we were in last year when we had a big piece of tax legislation pass the House and move to the Senate. Of course, that bill died. It did not go anywhere. But we're obviously in a much different environment now. The Republicans control both chambers of Congress. They have control of the White House. So, we don't anticipate that same outcome here. We do anticipate that this legislation will pass in some form. Um, so, we'll be watching that process and what that looks like over the coming months. But now is a great time to talk because we do have a good sense of what, high level what's going to be in the bill.
So, kind of diving right in, what are some of the most notable provisions in this proposed bill that business owners should have on their radar? Obviously, a lot of this stuff can impact their day-to-day operations. Did anything in the bill catch you by surprise? Yeah, I'll let you take it away.
Yeah, yeah, no, good question. So, there's a lot in there. I mean, this is over 1,000 pages of legislation, so we could be here all day talking about the details. But some of the big provisions that we've been working with clients to help them understand and make sense of are on the business side, of course. There's individual changes in the bill that I probably won't get into in detail. There's extensions of some of the Tax Cuts and Jobs Act. Uh, Rates for individuals, thresholds, credits, that sort of thing. But I really do kind of live in the corporate world. So when touching on those provisions with clients, some of the big ones that we've been watching are bonus depreciation. That is a hot topic, certainly for our clients. The bill proposes a immediate deduction, 100% for qualified property placed in service between some specific dates. So it would be after January 19th of 2025 and before January 1st of 2030. So it's a temporary reinstatement of that 100% bonus depreciation. That provision is under current law, under the Tax Cuts and Jobs Act, has been phasing out for property placed in service starting this year and then would be completely gone in 2027. So that's a big change there. And actually, on that piece, the House bill also introduced a new eligible category for bonus depreciation that's qualified production property. So for our clients that are in the manufacturing space, the development space, this is an interesting and exciting provision that would potentially allow for this new type of qualified property to be eligible for that bonus depreciation. There's specific provisions around that as well as far as when construction must begin and when it must be placed in service. But it's a provision that we haven't seen in the bonus depreciation world as far as kind of the envelope of the building being included in production property. So that's an exciting one. Um, Bonus depreciation, or I'm sorry, I just spoke on that. R&D expensing, that's another one that is a big provision that we knew would be considered in this bill. So under current law, any domestic research and development expenses are capitalized and amortized over 5 years. That's a provision that there's been a lot of advocacy around changing back to that immediate deduction, and this bill would allow for an immediate deduction when expenses are paid or incurred. And again, only during a certain time period. So this wouldn't be a permanent extension. It's temporary. This one would be for 2025 through 2029. So, another one that we have a lot of clients that have been looking for action on R&D expensing, and that is covered here in the bill. Another one, I think probably maybe the biggest one that I'm being asked about right now is Inflation Reduction Act energy credits. And this is something that it is a hot button topic, and I think there's a lot still to be determined. But when we look at what the House bill does to Inflation Reduction Energy credits, it's something we anticipated, and I think we actually talked about when we spoke in December, as far as the earlier rollback on some of those credits to kind of help with some cost offsetting here. And that the House bill does do that, does propose early terminations on some of the Inflation Reduction Act energy credits. Another thing that it does, especially for the investment in production credits, which a lot of our clients use to install solar panels, things like that. This bill proposes a pretty tight timeline on the installation of those eligible projects. It actually introduces a 60-day requirement such that a project needs to begin construction within 60 days of when this bill in theory passes. So that, we've been talking with clients who have been considering these energy projects. And if this bill were to pass as written today, that 60-day clock would start as soon as the president signs the bill. And you'd really need to potentially accelerate those projects to make sure they're still going to be eligible for a pretty substantial credit. It's somewhere between 6% and 30% of the cost of the project. So Inflation Reduction Act energy credits, that's another big one that I've been talking about quite a bit with clients. As far as you had asked if anything surprised me in the bill, and there is one specific provision that I was surprised to see in there, and my team has been helping me kind of make sense of what happened with this one. So, for our nonprofit clients or any nonprofit organizations out there, they may recall back in the Tax Cuts and Jobs Act that there was a provision that rolled up fringe transportation benefits into their unrelated business income tax. Um, and that could include things like parking lots on their property. And it was rolling that up into their UBI, their unrelated business income, and taxing it at that corporate 21% rate. That provision was in the Tax Cuts and Jobs Act, but it actually was retroactively repealed a couple of years later. So administratively, it posed a lot of headaches to kind of, do the work to comply under the law, then undo that work when it was retroactively repealed. That provision is in this bill. So the House passed version does include the roll up of fringe transportation benefits into that UBI calculation, and again is giving our nonprofit clients pause, saying, we've already been through this and we undid it, but now we're doing it again. So that's another one that I'm very curious to see if it survives on the Senate side. But it's certainly something to watch if you're in the nonprofit space. And I should say, in light of everything that I just talked about, this bill is completely subject to change. Right now it has passed the House. They actually just this week did a couple of technical corrections to the bill, but it is moving to the Senate now. There's been speculation, what's the Senate going to do? How much are they going to change? And we can talk a bit more about that, thinking about timing of all of this. But I just want to obviously put a big caveat on all of the provisions I just mentioned and say that's as of today, June 12th, completely subject to change as the bill works through the process.
Wow, that's a lot. So there's a lot
Yeah.
there.
Yeah.
Lot of stuff for businesses to be aware of. From your vantage point, how should business leaders approach planning when policy is so unsettled? Like you mentioned, as of this recording, here is how things stand, but again, they're subject to change. So what kind of proactive but flexible steps can they take now, kind of without overcommitting?
Yeah, that's a good way to say it. I mean, it's about kind of modeling out the scenarios, looking at the the legislative text we have today, kind of looking at the what if this were to pass as written now, what would this do to our business? That is something that obviously our firm helps out a lot with. I know our consulting team does a lot of scenario modeling to help clients out. But it really is kind of considering timing. I mentioned Inflation Reduction Act. Are we going to install these solar panels now? We're going to, if we're building a new manufacturing plant, is now the time or should we wait? state. So it's considering potential outcomes and timing. But it really is about staying agile, like you said, being flexible. I would not at this point kind of lock into any sort of long-term commitment that hinges on any sort of tax assumption, because right now is the time when we're watching for what's about to change. I would also say, as you know, kind of what can clients do right now? There's uncertainty at the federal level, sure, but we always want to keep an eye on state level as well. Where there's any sort of divergence from federal tax treatment. Um, Federally, we knew that this administration would be working towards some high level deregulation. But when we see deregulation at the federal level, there's often states are going to step in and kind of fill that void. And you may see an increased state level regulation or requirement. So it's not just monitoring this House bill, it's also remembering, the state or states, or, in many cases, countries where you're operating and how that all interplays. So, of course, working with a professional is well advised. I would also say specifically, this is a very specific thing, but I think it's important for clients right now. There's a lot of headlines around the bill's provisions on no tax on tips, no tax on overtime. The one specifically that I've been talking with clients a little bit more about is the overtime, because that provision, as written today, is would be retroactive to the beginning of this year. So if there is, if this passes and there is no federal income tax on that overtime pay, employers have to start to think about how is that tracked? How is that reported? We anticipate maybe some changes on W-2 reporting and coding for that. So that's something that I would say there's maybe a little bit more that employers could be doing now, with their payroll system and their reporting processes to consider how are we tracking overtime pay if this provision does go through.
Got it. Okay. Those are all great insights, I think, for businesses to be aware of. Um, Kind of on that note, are you seeing any early signs of how these proposed policy changes are influencing business behavior? Thinking things like hiring, expansion, capital spending, anything along those lines?
Yeah, I would say, I mean, just kind of slowing and a pause. I've mentioned uncertainty as executive orders are tied up in litigation. It's the same for the tariffs. There's been kind of the threat of tariffs, the reality of the tariffs, the pausing of the tariffs. Most recently we've seen federal courts pausing and then reinstating the tariffs. So, that trade policy, that logistics, that supply chain consideration, I think is making employers a little bit cautious, pausing and making sure that they have clarity before they're moving forward. So right now, I would say what I'm seeing as far as business behavior is just reacting to kind of the uncertainty as this bill moves through and we all settle into the new administration.
Right. Okay. That makes sense. Are there any sectors or industries that you think are especially sensitive to the current proposals, either positively or negatively?
Yeah, that's a good question. I mean, I think manufacturing for sure, real estate, anything that is capital heavy, highly sensitive to capital expenditures, depreciation, those sorts of things. Those industries are definitely watching this bill very closely. We also work with some multinational corporations. There's international tax provisions in the bill. Section 899 is a big headline, with potential huge tax implications for multinational corporations. So they certainly are impacted. Nonprofits, I mentioned a bit around that too. Higher ed, there's big swirling questions around tax exempt status generally, and certainly what this bill would do for nonprofits. And then definitely clean energy, Inflation Reduction Act credits I mentioned. We know that in the clean energy sector, of course, but also in industries that invest in clean energy projects on the financial services side, there's mixed signals right now of what's happening with these credits. So again, that's another place that I'm seeing, some pause and some concern around timing right now. So I would say those are the main kind of industries that I think are susceptible to change under this bill.
Okay. And I know you kind of mentioned timing a little bit too. So obviously we know that the bill is still early in the legislative process and it will likely face revisions. But what
Mhm.
are the next steps in this process? Are there any key dates or milestones that business leaders should watch for as we head into Q3 and Q4?
I can't believe we're already heading into Q3 and
I
2.
know.
Like, what? I know. It's so strange. Yes, absolutely. So, like I said, the House actually was kind of tweaking the bill until now, but the Senate knows what they're sending over, and they've already been negotiating the process right now. It's interesting, even this week, we've been kind of hearing some changes on what their target deadline is. We've had this July 4th kind of self-imposed deadline to try to get this bill done by that date before summer recess. That is an ambitious date. And, just given how long things take on the Hill, there's now some sense from the Senate that that timeline is maybe too ambitious. So even yesterday, Senator Ted Cruz said, that's not going to happen. July 4th isn't going to happen. But, I think they are working to move quickly. There's momentum behind the bill right now, and you certainly don't want to lose that, especially looking at the makeup of Congress. The bill passed on the House side by one vote. I know we talked about last time we spoke just the narrow majorities, on the Senate side as well. They really need to have unity across the party to get this done. So they certainly don't want to lose that momentum. I think there will be changes. News reports yesterday were kind of saying that senators expected to retain about 60% of what the House sent over to them and change maybe 40%. That's a big number. So the House wanted the Senate to use a really light touch with any sort of changes that they were making. And there's more and more indications from the Senate side that that may not be the case. Even kind of highly controversial or contentious provisions like SALT are under consideration for changes on the Senate side, which again throws that delicate balance on the House side into jeopardy as they, in theory, send the bill back to the House. Can they once again clear that hurdle of getting the votes that they need over there? So timing is tight. They're also considering the fact that there is a kind of looming August debt ceiling deadline. At that point, the Treasury is expected to exhaust its borrowing authorities, so they need a limit to be raised by that point. The bill would do that. So again, that puts like a timing pressure on the bill to get it done before that debt ceiling issue arises in August. So yes, that's, high level the timing on the Hill, and we should be watching certainly what is coming out of the Senate. But we have, like I said, that starting framework now. So we're not starting from zero. We can move forward, understanding that there's going to be tweaks, but we know roughly where the party's head is at with this bill.
I think as we kind of wrap up this conversation, if you could leave our listeners with one key takeaway from today's conversation, what would it be? What is the most important thing that you think they need to know as of right now?
Yeah, I mean, it's interesting because it feels a little like the Tax Cuts and Jobs Act because we're watching this big piece of tax legislation, and certainly it is a big piece of tax legislation. But this is not the Tax Cuts and Jobs Act. That was a complete overhaul of the tax code in kind of huge, unprecedented ways. This is not that. This is a lot of extensions to the Tax Cuts and Jobs Act. They're using that legislation obviously as a starting point, so we're changing things certainly, but I would maybe say, this isn't maybe as huge and scary as things felt back in 2017 with the TCJA. And of course, the landscape is different. There's additional complexity now with global tax coordination. The green energy piece that's all new. Deficit concerns right now. So it is a different landscape than we had back in 2017. But ultimately it's going to be, probably my same takeaway from last time, which was stay informed, stay flexible, work with experts in the field so that you don't have to monitor the ins and outs of this thing as it moves through. But you're going to want to kind of be ready to assess, especially any provisions that have that retroactive applicability.
Awesome. I think that these are all really great insights, and thank you so much for sharing on all of this. As you mentioned, and obviously it is really uncertain right now. But again, it's always great to prepare, just knowing that things could change.
Yes, exactly. Yeah, and I mean we can check back again when we have a final bill. But it is important to monitor what we have now, and we're here to help.
Okay, so as you know, we like to ask all of our guests for a good book or podcast recommendation. And last time you recommended Project Hail Mary. So I was just wondering if you have been reading or listening to anything else that you'd like to recommend for our listeners.
Outside of the One Big Beautiful Bill that I've been reading.
Yes, it does not need to be, um, doesn't need to be tax related. I'm sure you would never recommend that.
Outside of reading tax legislation, I have also just finished There's Always This Year. It's a memoir by one of my favorite authors. It's beautiful and moving, and it's actually about basketball, which is random. Yes. It's a kind of part memoir, part poetry, and it's about basketball and LeBron James. And really, it's kind of about moving out of your hometown and moving back to it. And it's just a beautiful book. It's remarkable. So There's Always This Year. That's my recommendation for this version of the podcast.
Awesome. Thank you so much for the recommendation. For our listeners, we will be linking Jess's recommendation in the episode description on our website and our Spotify. And that is all we have for today's episode. Thank you so much for joining us, Jess.
This is so fun. Thanks, Val. Thank you, everybody.
That wraps up our interview with Jess LeDonne. If you found this episode insightful and informative, please be sure to subscribe to our podcast for more episodes featuring our thought leaders. If you're interested in checking out Jess's first episode or her latest book recommendation, they have both been linked on our Spotify as well as our TBG Talks page of our website. Thanks for listening, and we'll see you next time.